following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
And welcome back to NinjaTrader Live. I'll be your host for this segment. I'm Tom Schneider, CMT with NinjaTrader. Traders Workshop, we like to bring in our NinjaTrader ecosystem partners so that they can share with you their wisdom and expertise with the trading markets. Today is no different, although it is a little different. We have a first-time guest on Traders Workshop. We're really excited to bring in Tammy Marshall, also known as the Fibonacci Princess on Twitter. How you doing, Tammy?
I'm doing great, Tom. How are you doing?
Doing fine. Tuesdays normally are good days anyway. It just seems like you get past Monday and Tuesday we're raring to go, but especially after a 3-day weekend, I'm just digging the markets today.
Yeah, well, I think it's the last 7 Labor Days that we've had. The day after, we've had a pullback in the market. So looks like we're keeping that same pattern going here. So
Keep that streak alive. Yeah, that's a form of seasonality right there
right,
that you
exactly.
just showed. So Tammy, it's great to have you on. We appreciate you being here and sharing your time with us. Can we get to know you a little bit better? Like, how did you get into the markets? What was, what attracted you to the markets? And then, what brought you to where you are now?
Well, I was actually a special ed teacher for 15 years. That's what my undergrad and master's degree are in. My master's is in child psychology. And I started learning how to trade when I met who was my boyfriend at the time, who's now my husband, Bruce Marshall. He started teaching me how to trade, started showing me some strategies on Thinkorswim, and I was really interested in it because I've always been good at math and patterns and number recognition and things like that. So I started learning how to trade, and then we got married, had baby, and not too long after we had a baby, our first child, I met Carolyn Baroden, who's known as the Fibonacci Queen, at or not a conference, but basically a company get together in Grand Caymans. And she showed me what she does on the stock market, which is obviously the Fibonacci technical analysis, and it just clicked with me so instantly. I was actually looking for something like this to help me define my risk. And I started learning how to do the work. And she said she was looking for someone to mentor and train because she wanted someone to come on and kind of take some of the workload off. And I ended up becoming the Fibonacci Princess. So that was about over 10 years ago is when I met her.
Oh, that's great. I mean, it is something I think for everybody. The markets have something for everybody. And there's always, it seems to me, people who stay engaged with the markets, there's something that clicks with them. And, this is just, a prime example of that, right? You found a study or, pattern is the right word, I think, with Fibonacci, because it definitely is a pattern. It's a unique pattern and something that's so compelling. But what was it about the Fibonacci? Was it Carolyn teaching you? Was it more about the pattern itself? Like you clicked with the math, you clicked with that, or was it, Carolyn's take on it? How she applied it? What was it really that kind of kept you and grew your business here?
It's the pattern and the sequencing. It's recognizing the previous swings in the market. It's just something I instantly see. And I thought it was just a normal thing. And until I started getting really deep into it and talking to a lot of people. And actually, it's not something that everybody sees. It was something that came to me very easily. Actually, when I was a child, that was one of my favorite things to do was patterns and sequencing and number relationships. So when I found out that I could actually do this as a job, And the other benefit to it was that, we've got an 11-year-old now, and our youngest just turned 5. And it allowed me to actually be able to also be kind of not stay at home mom, but I was staying at home and working. So being able to stay at home, be with my children when they were very young, and work at the same time. So I really, I really just fell in love with it because it gave me so many different opportunities. But the biggest reason why I fell in love with it was because of the way that it defines the risk. Because my husband was, basically a fundamentals guy. And I was like, oh, goodness, do I have to read and listen to all that? Then I find out about this technical analysis, and I'm like, oh, good. Now I can just see where my risk is defined instead of
Well,
having to listen to what everybody else has to say, which I still do that anyway. But
that's funny because as a market technician, you know, understanding technical analysis, which I would certainly put Fibonacci as part of. It's a big part of it. We always joke about the being the not lesser, but like kind of the not widely accepted, like a CFA, like fundamental analysis, right?
right.
And so it's funny that your husband is more fundamental and you're more technical. It's like that opposites attract kind of thing. But that's wonderful. I think that's a great thing.
Well, yes, that was what was pretty funny about it, was that he actually was a financial planner for a long time.
Okay.
And he told me that when he was a financial planner, he, he thought that the technical stuff was all just a bunch of hoo or something.
Right.
And now he's sitting 6 feet from me right now in the same home office. And now he uses my analysis all day, every day to make his decisions in the stock market.
Of course. It could be no other way, Tammy. I love that.
Exactly.
That's great. Um, so let's for a while I've been looking at your chart. It's very intriguing. So maybe we can take a look at how you apply the Fibonacci's, because you mentioned risk, which is really interesting to me. When I think of Fibonacci, I think of Elliott wave analysis, and I think of wave analysis in general, extensions, and corrections, if you will. Um, but I don't really kind of think of it as in terms of risk management, but of course there are areas we're looking at, so they can. I'm just curious to hear, how you discuss that, how you describe that in terms of Fibonacci.
Okay. Well, one setup that I gave today, live in my trading room, I do a morning video every morning at 10:30 a.m. Eastern. And speaking of defined risk, one of the setups that I gave here is on IWM daily. Now, I do like to look at certain moving averages, and I do like to look. The pink one here is the 200 simple, the green one is the 50 simple, and then the blue is the 5 exponential, and the red is the 13 exponential. So we've
Oh,
got all of the moving averages on the side of the bulls. What I mean is they're all stacked, and where price action is above the 50 and 200. We've got very defined risk here on IWM daily. We're nowhere near those targets extensions, which are 237 and 248. So what I was telling my clients is that this is a great opportunity, because if we push through that and make a deeper downside correction, I don't have more symmetrical support until 211. So that's what I mean, is if it busts that 214.8, and of course you want to give it just a little bit of wiggle room. The next area that I consider a strong setup is that 210 to 211 area. So that is why your risk is really defined, because if we push through that, then you just need to have that stop in place, so that you minimize your losses.
I see. Okay. So when we're talking, so because we're futures centric, IWN would
Oh,
be the
yes.
equivalent of the Russell
Right.
futures that we're talking about, small caps,
Yes.
right? And I was laughing because not only, you have four moving averages, I have four moving averages, and the color coding is pretty much the same, right? And I just was laughing because a lot of times you get four moving averages. How are you going to color them? Jim likes to have the red one is the smallest, right? Because it's hot, it's moving. And just so happened pick 200 pink. I don't know why, but that's what it is. It's funny that they match up. But interesting because we use moving averages in the same way. Kind of, if you break one, you look to the next one down. If you break up, you look to the next one up, if that's the way the market's trending. But you're using the Fibonacci levels the same way, right? If we break a 50%, you're looking for the 61.8, or you're looking for the 38.2, whatever it is, right?
Right. And the way that what, you can have three or more price relationships, which can be retracements, extensions, or symmetry that can form a setup. But I really like for there to be that red symmetry in there, and that's the 100% swings. I don't just use retracements by themselves as setups or extensions by themselves as setups. I like to have that red symmetry combined with it because those are previous swings that have happened in the market.
Okay, so explain, when you say symmetry, what are we referring to
Okay.
exactly?
Yes, I'm
Like,
glad you asked.
yeah.
So we're looking at a swing that already happened in the market.
Okay.
So this high to this low is a pretty big swing.
Yep.
And I project it from that more recent high from the 26th of August. And that's what gives me that 211 area.
Gotcha.
So I'm comparing this swing and saying it's correlate. You know what I really love about that setup? If we bust this two-step, which I'll go over in just a second, I love this 210, 211 area because it's combined with that 50 simple, right?
Right.
That's such a nice setup zone because just like you, I also notice that we either bounce off of or fail at that 50 simple or that 200 simple.
Right.
So I
Right.
really love that setup zone if this two-step doesn't work, but we do have a little, what I call a two-step pattern. It is different than an Elliott wave two-step pattern. A two-step pattern for us is that you're going up, up, up. Then you
Yep.
take two stairs down into this setup zone to
Oh, wow.
continue the move back up. So our two steps are the opposite direction of the trend.
Right. Right. That makes sense. A corrective phase, if you will.
Yes. And so the symmetry for this setup is that high to that low projected from that high. And that's why you see that little red bar there that
Right.
is correlating with an extension that's inside of this swing. And if I'm going too fast and people get too confused, I completely understand. I'm always more than happy to go back
Well,
over things. And then
let's
a
do
retracement of another swing is what a two-step is comprised of. It's three different things.
so Tammy, real quick, if we can, do you have the possibility to put on crosshairs by any chance?
I do. I always put them on whenever I don't want them.
Right. It's always the way, right? When
It's
you need
always
them, they're
like
not
that.
there.
I can't
If you can,
remember
if not, it's okay.
where I
We're
do them.
because when you use a drawing tool, we can see the drawing, but if we're
Yeah,
pointing things
there
out,
they are.
yeah, that's perfect. That's perfect because the Zoom software doesn't pick up our cursors, so but they'll pick up the crosshairs. That's
Oh,
perfect.
wow. Okay, I see.
Um,
Okay.
so that's interesting. So you call them two steps. I love that because when I've and the reason I've talked to other CMTs and Elliott Wave was part of that process of getting certified was we always learned like five advanced, three steps back. It's like, well, really it's two steps back because one of those three steps is actually advancing in the train, right? It's kind of a zigzag pattern. So when you call it a
Right.
two-step pattern, that makes more sense.
Right. Right. And that's Carolyn's thing. I mean, she came up with that. So I have to give credit to the queen.
Sure, but
Give credit where the credit is due.
well, I'll give
But
credit
yeah, it
to
does
you.
make sense.
You can give it to the queen. Um,
Sounds great.
that's the first I've heard of it, so that's great.
Awesome.
So this is on a daily chart, correct?
Yes, that's correct. And I
And
have ES and Q charts and gold and crude and everything else, futures charts if we want to look at any of them.
yeah, whatever you feel is something that was interesting or notable, we can certainly go over that. But we can look at these on intraday as well, correct?
Yes.
Yeah, yeah. I mean, generally, I find that technicians look at multiple time periods, and generally studies work the same way on different time periods. Um, but yeah, if you have the E-mini on an intraday, because today is so interesting, right? Well, maybe it's not interesting if you're long, but it's like you said, it's the seventh day seventh day after the Labor Day weekend. We've broken down. I'm just curious what that looks like on a day like today when from a pivot standpoint, we're exceeding, an extreme pivot level. We're 2% move down, which, in the NASDAQ, 2% down doesn't happen that often. I'm wondering if you can show that on an intraday chart if possible.
Yes, absolutely, I can. So I have got on my other set of charts, I hope that this will transfer
Oh,
correctly. Yep,
perfect.
it did. So this is a 120-minute chart. But what you can see here is we still haven't taken out that previous low. So we still haven't taken out that low from the 28th of August. So, I mean, it looks
Interesting.
bad, but it's maybe not nearly as bad as it seems, right? But so we're at 19,149, about 150 area. And then that previous low from August 28th was 19,140 from last week.
And we
So
like to look at that, Tammy, and we say, we've traded here before,
we've traded
right?
here before where it's a double bottom.
Right.
Yes, exactly.
Right. Exactly.
Yep.
Oh,
And
that's
I've got quite a bit of support here, as you can see. I mean, we've got a lot of previous swings that are very similar to the swing that we're in. Plus, we've got an extension off of a previous swing, and then we've also got a 382 and a 618. So, got a pretty nice cluster of support here, anywhere from 19,097 to about 153. So, not to mention the fact that I've got timing for a low. So, and that's an
and
intraday timing for a low.
when you say timing for a low, the we often think of Fibonacci's in terms of price, right? So these are how the price levels or these ranges, these trends are divided into Fibonacci levels. When you say, is there a time aspect as well?
Absolutely. Yep. You
Yeah.
can use the Fibonacci numbers on price or time access
Okay.
in order to find, support or resistance.
Got it. Got it. So you're saying there's timing here to suggest cyclically there's a low, and
Yes.
not necessarily based on the Fibonacci levels in price, but in time, of course.
Yes, absolutely. So what I do is I load a swing file that I've made, which kind of shows me the more important swings that we've had here.
Okay.
And this is something that I do by hand to load these swings. And then I look and just, look at the number of bars in the swing that we are currently in from that. Get my hot button on so it'll grab it. From, the low from last night to the low that we had earlier. I actually did it from that one bar above that, in front of that. But then it looks at histogram, something that's known as histogram timing, and then it gives me the larger bars on the bottom here. And the larger ones, the larger they are, the more likely they are to hit. So we're not only just on top of histogram timing. I'm going to fix that box at the bottom. It got a little messed up, which happens sometimes with data coming through. But so you can see these larger pink bars at the bottom.
Right.
Those are the ones that have a higher chance of hitting. Now, any of the pink histogram bars here, let me see. You said the crosshairs helps. Any of the pink histogram bars down here at the bottom can hit.
Yeah.
But the ones that are larger have a higher chance of hitting.
Wow.
A
Okay.
greater chance of hitting. They have a higher percentage chance of hitting.
So, and you're analyzing based, the swings
Based on
on the.
previous swings we've already seen.
Got it. Got it.
Yep.
So that's really interesting. Yeah, and like we like to say about technical analysis, it's all about probabilities, right? Because nothing's
Right.
100%. You're trying to maximize the probability of something happening, essentially, is what we're doing.
And timing is anywhere between, 60, 65% accurate. And it's interesting because we will go through like a time period where it seems like every day, my timing's hitting and it's just perfect. And then maybe go for a few days and it doesn't work. So
Right.
it's real kind of interesting to see how it kind of balances out.
Yeah, and that's why we have stops and all the protective stuff, because things don't always work out. But 65% from a pattern standpoint, if because I consider swings patterns, right? That's a pretty good percentage in terms of predictability.
Yes. Yes, I do too. I do too.
Yeah. Yeah.
Okay, I think it's great.
Right,
You only
right.
need more, how much more do you need?
Yeah, yeah, yeah. Well, then that's also, where kind of position sizing and risk management, help with that 35% that doesn't work, right? To
Absolutely,
offset it.
absolutely. I mean, minimize your losses, and then when you have the big ones come along, those are the ones that wipe out 8 to 10 losses.
Right.
So if you're doing it right, right.
Right. Right. Yeah, well, yeah, we don't want 8 or 10 in a row, but
No.
you're right. Over time, you have to have those winners to offset the losers to come back, right? Um, it's all about that. So maybe we could take a look. Did you mention crude?
Yes.
Yeah, let's take a look at crude, because I think it's a big week in crude. We've got OPEC plus meeting, all the foundational stuff your husband might like about crude. The news coming in, Chevron increasing production, offsetting maybe OPEC plus's tightening. Um, but the production cuts might be lifting, all this news. Um, it's all encapsulated in the chart as far as I'm concerned with as a technician, right? So, just curious to see what you're seeing. And it looks a lot like, that double bottom that we saw earlier, um, in
Yeah,
the
we have a
NASDAQ.
lot of previous swings that are very similar to this swing that we are in right now. So I see this one. So this is what I'm talking about when I say looking at previous swings in the market. This
Mm,
swing, this swing, this swing. I don't think this one is. It's a little short. Yep. All three of these swings. Can you see that? The blue
yeah.
lines?
Yeah,
Okay,
we could
great.
see the blue lines. Yeah.
Okay. All three of those swings are similar to the swing that we are in right now, right here. So, and it's all lining up with previous symmetry that we also have. So it is a really nice area of support. Now, I would say any buy here, of course, is going to be counter trend because you have all of the moving averages on the side of the bears.
Yeah.
But, and the other thing I would tell you is if, see, that's 70, 52 to about 56. If you decided to get bullish here, just make sure that you're paying attention to what's going on that 30-minute chart. And this is what I give live in my room all the time is the 30-minute chart, because we're going to have quite the uphill battle here now, right?
Right.
Trying to
Right.
get through a lot of these previous swings, this previous resistance that we've had recently. And even once we get through some of this previous resistance, we're going to be looking at some of that daily resistance. But this is the kind of thing. These are the kind of things that I give that really helps you to know whether or not a bottom is in. Because
So,
that's what happened this morning when I was given my live futures charts on ES and NQ. Is that I kept telling everybody until we get through that 10-minute resistance, because I do go all the way down to a 10-minute time frame on ES and NQ. That low is not in place on the 120-minute charts.
right, right. Okay. So what you just did is you measured previous trends in this 30-minute chart. Yeah,
Yes,
30
this is
minute
a
chart.
30-minute chart. Yep.
And,
So I
and
look
a,
at these previous swings.
right. And you applied them to the current low, right?
Yes.
And you
Yes.
came up with these resistance areas which overlap to some extent, right? Some
Mm-hmm.
of them do. And not only that, you have the moving averages, which are downward sloping. We know that's bearish. I look at these as I call them checklists, Tammy.
Yes.
You got to check them off. Okay, we got over the first hump. Now we got to get over these next 7 before we can even consider maybe that we're back in bullish mode. Before we even take out that high from 3:30 in the morning, whatever it is, right? So,
Right. Right.
uh,
Exactly.
but it's
And
important to know where those checkpoints are, because you might get some resistance there.
Yeah, absolutely. And on the intraday charts, we use 8 and 34. So the
Okay.
blue is an 8 and the red is a 34. It's a little bit different than the daily.
And those are Fibonacci numbers as well.
Yes.
I mean, I know, Tammy, you probably know, all the Fibonacci numbers to a certain level, but for somebody who's new to this, 8 and 34 are part of that sequence. So I love it when I see moving averages that are not 50 or 100 or 200 and they're 89 or whatnot, because then I know, okay, this person knows what they know about Fibonacci, right?
Yes, absolutely.
So, we're kind of coming up against time. This went way faster than I thought it would, Tammy. I want to give you a chance to show people or tell people where they can find you online, in addition to the ecosystem. Where can people find you if they want to reach out to you or learn more about what you do?
Okay, so I work currently as an independent contractor at ElliottWaveTrader.net. We have a room called the Fibonacci Markets and Stocks room there at ElliottWaveTrader.net. It is mainly Elliott Wave guys there, but we're the Fibonacci team there that works there. Carolyn Broden, the Fibonacci Queen, also works with me. And then we have another lady named Shannon who's been with us for about a year and a half that also works with us. So you can find me there. Then you can find me on X at TraderTammy1.
Okay.
And I'm happy for you to send me a message on there. It does ask for my approval, obviously. And you also are welcome to post on my wall there if you're wondering about a chart or if you need further explanation on something. I'm always more than happy to answer questions. That's the teacher side of me that I have in me from so many years of teaching. And on Instagram, I'm at Tam Marshall 76. And I mean, I'm on Facebook, but I mainly keep that for family and friends. But I do have clients that follow me there. Tammy Norris Marshall on Facebook.
Well, that's great. Tammy, again, we really appreciate you coming on here and speaking with us for this segment, and we'll have you back on a couple weeks. I know you have a lot to talk about, so we'll attack a different topic next time. And again, just want to give you thanks.
Thank you so much for having me. I just truly appreciate NinjaTrader giving me this opportunity, and I will look forward to being on with you again soon.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.